as far as mainland Chinese equities is concerned, the bias is clearly for more policy easing. So why are you cautious on mainland China?
I would be quite skeptical about policy being easing. In fact, we've seen new requirement or new announcement that's made by the NDRC on last Friday, asking for service fee cut for the internet and e-commerce platforms, and therefore it's negatively affecting both the operation and the way that the platforms are charging for their services, and therefore revenue earnings would be affected. So I would doubt that the policies easing. In fact, to say the least, it's not coming off at all, if not tightening.
All right. Can you walk us through and explain why you are overweight Chinese banks, insurance and the real estate firms? Because for real estate and the property developers particularly, the balance of regulatory risks seems quite high.
It really depends on the investment time horizon for an investor. If you are looking for a long-term investment in China, we would suggest for the investors to look at the sectors that's very much undemanding in terms of valuation. That would include most of the major banks and the major insurance companies. But if investors are looking for short-term capital gain, that would be like 3 to 6 months, and you look for some trading opportunity, then would suggest real estate property developers, because it looks like that the valuations are very undemanding, and chances are, if there's any easing at all in terms of monetary policy, fiscal policy, it can likely benefit the real estate sector as a whole.